Good morning. Give everybody an opportunity to jump on here. Um, mini mini bounce, at least pre 8:30 here. Um, Weekly ADP dropped below a 20 handle, bond friendly, business optimism beat. Interesting. Um, Yesterday afternoon, as we kind of wait for uh, this 8:30 data, and it's sort of what we were sort of I think hoping for in terms of maybe a little bit of a rally into CPI here. Thanks to Iran and this conflict has slowly, or maybe not so slowly, fallen by the wayside. Um, Price of oil, it's everything, right? But that being said, some Fed testimony, or I should say Fed speak yesterday, Warsh is testifying today, uh, you know, talking about, putting a rate hike on the table in 2 weeks pending the inflation data. I thought we got away from forward guidance, so to speak. Not that I'm opposed to it. I'm not in favor or against it. I do think, generally speaking, forward guidance seems to help volatility a little bit, and to whatever extent that you don't want volatility, you welcome forward guidance. I don't understand the point of having forward guidance a week from your next Fed meeting or whatever. I mean, like, what are we doing? What's the point of having the meeting? Good morning, Bob. Long story short is I don't understand the conversation yesterday, and I don't completely understand the reaction, right? Let's just wait a week. I think that those sorts of things tend to age better than worse, generally speaking, but, remains to be seen. To me, this 8:30 report, and I don't know that bittersweet is the right word, but, if it were to come out bond friendly, is somewhat bittersweet in that, it would be the old Denny Green. We knew who they were, who we thought they were. Price of gas and oil went down. It stands to reason that last month's CPI, at a minimum on a headline basis, but potentially on a core basis, which probably takes a little bit longer to catch up in a moving energy price market, you're going to celebrate that, and then check your phone, check your screen, and realize that oil is potentially approaching a 90 handle again, and we really don't have any end to this conflict in sight. That being said, we certainly would welcome a bond-friendly CPI number. Ahead of this number, we're at 460 and change on 10s. What are the markets saying? Mostly worse overnight, indicating generally worse here on shore. NASDAQ futures are slightly better. VIX is up 2%. As you might imagine, crude and Brent up a couple percent. 80 the buck on crude, 84 and change on Brent. Natural gas worse, silver and platinum worse, dollar weaker versus pretty much all currencies. And sort of there you have it. We've got 1 minute to go before this data hits. It'll be interesting. What if we get a negative headline, which is what the prediction is, but a hot core? Generally, we really only care about the core, but does the market fixate on that negative and kind of rally here? I guess we'll see here. Less than a minute. We got Fed testimony at 10. I'd keep an eye on that. And Barr, Goolsbee, Cook, and Bowman all speak today. Here we go. Core, flat, big headline, negative 0.4. Headline year over year, 3.5. Big misses across the board. Yearly core 2.6. A huge rally down in coupon. Tens down 10 basis points in yield, 418. Did I say tens? I meant twos. Tens all the way down to 452. Wow. MBS lagging big time here. We are a little bit short sixes, but we are long everything else. We lifted everything down in coupon yesterday afternoon. So you got to love that. Seth, are you on? I can't tell nowadays with this new StreamYard thing. Where are you seeing it? Okay, here we go. Fives up 16, 4.5s up 18. You know, Sean, when you watch this, maybe you shouldn't have locked. I got a text message last night. Would you lock or not lock? And I'm like, look, dude, the damage is done. I think that you're taking on a lot of risk tomorrow, but I think that there's a really good chance that it goes our way. And I think he may have locked it. That was a sacrificial lock. I mean, you know, Sean took one on the chin for everybody else's benefit. 453 on tens. Really, everything down in durations. 2s through 5s are rallying huge. 11 to 12. 7s are approaching a 10 basis point rally. 439 on 7s. Let's see if we can breach 450. You know, people thank you, Jesus, on the thing. Yeah, I mean, Fannie's up 16. This is a huge sigh of relief for the markets, and directly counteracts yesterday's Fed speak. Right, we're going to look at inflation. So what you saw yesterday was. You know, and this is why forward guidance, and we've talked about this before, the numbers are going to be the numbers, right? The data is going to be the data. And so at the end of the day, you know, I think that you've got to follow, I think you got to follow the numbers. Here's the bottom line. If you have any questions, post them here. I'm just going to recap this again. Actually, and let me go in, see if I can look at the report, and we'll talk about the report for a second. But headline came in at 4.2 last month, expected 3.8, actual 3.5. Month over month headline 0.5, expected negative 0.1, came in at negative 0.4. Yearly core 2.9, expected 2.8, came in at 2.6. And then the monthly core 0.2, expected 0.2, came in flat. You just couldn't ask for more. You just simply couldn't ask for more. This decline in the all items index was the largest 1 month decrease since April 2020. The index for energy, as we expected, fell 5.7%. Some context, it rose almost 11% in March. So the energy index was the largest contributor to the monthly all items decrease, more than offsetting an increase in shelter and food. So, and we've talked about this, right? If the Fed is going to hitch its wagon to the price of oil, the market's going to trade the price of oil. Right now, we don't love it. If we're closer to the end of the conflict than the beginning of the conflict, which you know, regardless of the noise of the last week, I would still think we're closer to the end, right? You know, you've got the bond market's going to ultimately at some point forward project easing inflation and therefore an easing Fed. And I don't mean that they're going to ease rates, meaning that they're going to be less hawkish. All right, let's see. Food printed point 0.2, flat month over month. Away from home, point 0.2, up from point 0.1. Excuse me, take that back. All food was flat. Food at home was up point 0.1. Food away from home down point 0.1. Energy went from 3.9 to negative 5.7. Every component across the board except for piped gas, which went from negative 0.5 to 0.5, printed negative. All items less, which is the core, was flat. Commodities printed negative. New cars flat. Used cars negative. Apparel negative 0.6. By the way, was 1.3. I think that's in February, something like that earlier in the year. So it's not a celebration of negative 0.6, but it's that summer swoon that I've been predicting, probably a contributor to that. I mean, just because the price of gas went down 3 weeks ago doesn't mean that we should have apparel prices cratering. It's probably an indication. Those are two kind of out there concepts and words that summer's not going to hit quite the way they expected. Medical care commodities printed negative, but slightly better on the month. Services flat. That's big after printing 0.4, 0.3, 0.2, 0.5, 0.3, printed 0.3 a year ago, 3.2 for the year. For it to print flat, there should be some attention paid to that. Shelter came in at 0.1, lowest number this year, 3.3 on an annual basis. Transportation services negative for the second straight month. Medical care services negative. Yeah, just great number for rates. Those who want lower rates should be celebrating this. We still got PPI tomorrow. Not certain that we're going to care a ton about it, but I think that the market is going to certainly give it a look. Do you lock? So what do we do today as we wind down? Do you lock the dip? Well, I'm going to continue to say 6 coupon is full on lock. We're at or around the best levels of the last 90 days. I'm going to tell you that if you had the scared out of you yesterday, you probably locked 5 1/4 to 6 1/8. I mean, look, how much steam can we possibly get out of this? It's hard. It's really, really, really hard to say. I mean, on a 5-day chart of fives, we are still 11 ticks, call it 33 basis points off the worst levels. I think the most difficult part of trying to evaluate this bombshell, right, is what does this mean for the next 3 days, 7 days, 2 weeks? Because, and you've heard me say this before, right? In a vacuum, if you were a buyer of bonds last week or whenever the rally kind of petered out, when did fives in the last month peak? So call it June 16th, call it June 26th. And you were even a buyer around July 4th, right? So if you were a buyer of bonds without knowing what this inflation print was, right? Without knowing that you were going to absolutely have your socks blown off this morning. And I can't understate this report enough, okay? This is, again, not to be redundant, the Fed said that they believed that now old Fed, right? So there, that's a wrinkle there, but that they believed that this inflation was transitory and tied to the price of oil and the conflict in the Gulf. And this report fully and wholly supports that. Okay, so So long story short is if you were a buyer of bonds a week ago, 3 weeks ago, pre bombshell CPI, how are you not a buyer today? So therefore, should we be at, and where did tens get to? Let's see. Why aren't we at 438? Why are we at 456? Well, I don't know that this report alone gets us to 438, right? And so how much room do we have to run here? The rest of the day is going to have a lot to say about it. And right this second, the market's sort of saying not so fast. We are definitely off best levels, 4, 5, 6 on tens. A lot of times, this is a little bit of a square up, a little bit of a head fake. We see this on big non-farm payroll days, where that you've got a first move and then we retreat, and then the second move is even bigger in that direction. I think everybody's kind of holding their breath for 10 o'clock. One would hope that this is addressed and it's a prepared statement, so God knows. But if there's some questions as well after a statement, I'd certainly ask about this inflation report. And I think that if I were in the White House, right, if I were on President Trump's sort of economic team, right, I would say this is our chance, right? You want lower mortgage rates, you want lower rates. Let's finish this one way or another, once and for all, so we can get gas back down to 60 bucks, so that we can beat the drum of, look at inflation in this market today when oil is at 60 bucks a barrel. That's what I have to say. Listen, like I said, here I take this opportunity in most scenarios, short-term locks. You lock this dip if you were offside, 6 1/4, 6 3/4, maybe higher, basically an automatic lock here. 5 1/4 to 5 5/8, 5 3/4, 6 1/8, in that range. You sort of danced with the devil, and because of this, you kind of got out okay. Maybe discretion is the better part of valor. But in terms of August, September, my timeline, it's hard not to feel 100 times better about this summer swoon that I've been calling for. Remember, bulls and bears make money, pigs get slaughtered. Thanks for joining live, watching on replay. I'll see you guys tomorrow.